ladies and gentlemen, I'm Joseph Norwich, Senior Trading Manager with GDM. Today's session outlook on Tuesday, we have important news. Yesterday, of course, we saw some relatively good US data, especially the ISM data out of the US. We saw that the dollar rose on Monday, and of course, that was a reverse from previous session losses, as the currency, of course, benefited, I quote, generally positive US backdrop, such as raising interest rates at the time when major central banks are entering on hold or in policy easing mode. Now, we see that the dollar was rising yesterday on relatively good US data. We saw some somehow mixed numbers compared to expected and previous, of course, on construction spending, which of course grew 0.8% to $1.19 trillion. Of course, that was its highest level since April 2006, but that's of course below the reading of 1.1%. Anyways, what I'm trying to say is that the gradual rise of interest rates throughout the year could actually happen with the number of previously stated from Fed Chair Janet Yellen number of interest rate hikes, and there for not more than at least two more rate hikes throughout the end of the year. What I'm trying to say here is that despite the fact that major currency pairs are falling, major currencies are falling against the US dollar, we're seeing the commodities benefiting from the whole bullish dollar sentiment, and furthermore to that, it's also from a very long time that gold is one of the commodities that I mean, except oil, that is of course the other one, which is not relatively bound to the US dollar, although it's denominated in US dollars, but of course it's more over the supply and demand factor that it actually influences the oil prices. However, gold, on the other hand, despite the supply and demand factor, we also have the investment type of factor that actually is right now driving gold prices, but we will see about that in the next following minutes. Let's see, however, what happened during the sessions here on the chart. We saw yesterday that the euro was trying somehow, after the decline one more time to 1.066, then it bounced to the 50 exponential moving average, and of course today finally broke below that specific level. One more time, it's imperative to understand, of course, that the euro is falling on a stronger dollar, but of course today, as we mentioned, we have some really important data out of Europe and of course the United States. We see first of all we see the retail sales out of the European Union, then we see the trade balance out of the US, the factory orders, and of course about 7 hours from now, the European Central Bank's President Draghi speech. All of this, of course, will influence either direction the euro dollar. So therefore, some further caution is needed. We see that the British pound is also falling against the dollar after, of course, it didn't manage to break above a key area of 1.2550, and of course it fell back below the two major moving averages, the 50 and the 200. Now, right now, further downside direction could be expected towards levels roughly around 124 and of course 123.55, somewhere around these areas here on the previous key support levels from 3 weeks ago. In any case, today, in about a few minutes' time, we're also going to see the PMI construction data out of the UK, and therefore, right now, preferably would be a better market condition to see these numbers first, despite the stronger dollar, despite the confirmed downside direction. Data such as this could actually halt the downside for a considerable amount of time before it actually resumes. So, of course, it would be better to immediately get into a profit potential when we're opening positions. As expected with the previous session, we saw that the US dollar against the Japanese yen is falling, and as I mentioned, this is mostly on demand of safe haven assets. So as I mentioned earlier about gold, same thing goes for the Japanese yen, as we know that investors are seeking the Japanese yen as a safe haven. Also, therefore, despite the gain with the dollar index on previous session, that was yesterday on Monday, we're now seeing downside direction against the sought Japanese yen. Now, the same case scenario goes for gold prices. We can see that it actually broke above one more time a very significant 1255 area. And of course, it's aiming for further highs. That was in yesterday's session, that climb above the 1252 resistance, now support area here, and a breakoff. We can see the 1, 2, 3 step scenario could be valid for the short, for the near time, for the near term. Of course, areas between 1260 and 1259 are a significant resistance area. So we're looking further upside from here on towards 1266 and of course 1269. Of course, let's have a look finally at crude oil prices. What happened yesterday was that the prices faced a little bit of stallment, mostly on the American Petroleum Institute's expected data to come today. So traders took some profit. We see that the price was hovering around the 50 exponential moving average, or the roughly just above the $50 key area, which is testing right now at the moment. And of course, if it fails to hold further downside towards the 200 exponential, and then at the 48.80, and of course 48 levels again. But of course, if it holds, the first target could be sitting somewhere around these levels at the 50.65, and the next one goes at 51.40. So that's all about currencies and commodities in today's session, ladies and gentlemen. However, a very important key factor today for gold would be the 1260 area. So if we see a break above this area, there is going to be a significant upside towards the 1300, where of course minor and major resistance areas should halt the upside for some considerable time, of course, and this would be normal because retracements are needed to see further upside. That's all of the most important news of today, and I'll see you again tomorrow for further insights. Thank you for watching.